Hello and welcome to the program. I'm Chimeze Obi Iwabu. Coming up on the show, EU provides 7.6 million euros to address hunger challenges in Mozambique. AFDB grants emergency aid of $686,000 to combat adverse effects of drought in Madagascar. And OPEC Chief Mohamed Bakindo pledges to deepen ties with new U.S. administration. First, let's check on the markets. And major markets in Africa were in the green at intraday during midweek trading. And Nigeria's main index reversed the negative trend seen since the beginning of the week and was up 0.17% as at midday, while the JSE index in South Africa jumped 0.82%. The EGX 30 in Egypt rose the most at intraday and was up almost 1%. Kenya closed negative on Tuesday. And the positive sentiment spilled into the Middle East, where all the major markets were in the green at intraday. In the UAE, Dubai's main index advanced the most by 1.41%, while the Abu Dhabi index was higher by 0.25%. Elsewhere in the region, the Qatari index rose 0.28%, while Saudi Arabia's market added 0.07% at intraday. And in Europe, stocks opened higher today ahead of the inauguration of President-elect Joe Biden. Okay, let's cross over to Frankfurt now, where Chelsea will update us on the developments coming out from the European space. Hello, Chelsea. Well, Europe is awaiting the inauguration of Joe Biden later today, with EU officials hoping for a reset in EU-US relations. What would that mean?
There has been a lot of hope being circulated around Europe over the past couple of weeks. There are very high expectations for this new U.S. administration, and we've heard from really politicians all across the continent that they do hope this will lead to EU and U.S. relations really mending. And we'd seen EU-U.S. relations really be battered over the past couple of years by the Trump presidency. There have been billions of euros worth of tariffs slapped on U.S. and also EU goods. So there's been a bit of a trade war here as well, even though the U.S.-China trade war has really taken most of the spotlight. But now everyone is really hoping that we'll start to see the EU and the U.S. working closer together. Potentially that we'll see some of these tariffs taken off. But at the same time, a lot of EU officials are really warning against getting too optimistic about what the new Biden presidency will mean for Europe, in part because there are still a lot of outstanding issues between the EU and the U.S. For one, the role of China in the global economy. President Joe Biden wants to really form a bloc to combat the rise of China. The EU has been a little more hesitant to take on China directly, and just recently signed a very highly anticipated investment pact with China. So whether they can come together and find themselves on the same page over how to approach China will be a big issue. But there's other outstanding issues as well, such as proposals for a new global taxation system for digital giants like Apple and Facebook as well.
And Germany has extended its lockdown until February 14 and introduced stricter measures to contain the coronavirus. Walk us through this new decision.
So yesterday, the federal government and state leaders decided to, for one, extend the lockdown that was set to expire at the end of this month until the middle of February. But they have introduced new measures as well. In addition to bars, restaurants, retail stores, any non-essential business staying closed, they now also have made it mandatory for employees to be able to work remotely if it's possible in their job. So any employee that works or lives in an area with more than 50 infections per 100,000 residents, they will be allowed to work from home. We've also seen the government introduce new rules about what kind of masks we can wear in public. So if you're on public transportation, if you're in a store, you now have to wear a medical mask and not something like a cloth mask. So that is likely to cause a bit of disarray, as many people don't have those masks yet. They've kept schools closed as well. So it is an intensification of the lockdown, but there still is a lot of concern about the virus, and especially the new mutations in the virus that seem to be more contagious.
What kind of economic support can we expect the government to provide to businesses and people impacted by these new measures?
There still are a lot of economic aid programs that the German government has available for businesses and people that have been impacted by this. The government has already spent hundreds of billions of euros supporting the economy in 2020, but they have been providing about 10 to 15 billion euros of support a month to businesses like retailers, restaurants that have been shut down by the lockdown, and they're basically giving them the money they need to pay their fixed costs, so things like rent or electricity. They've been covering those costs. They also continue to support many workers through the short-time work scheme. About 2 million people were on that scheme at the end of last year, where the government subsidizes their wages. Likely more people will be joining that soon. So the government continues to offer a lot of support, but the focus now is really on getting this money to people faster, because there have been a lot of bureaucratic hangups and a lot of delays in getting the money to the people that need them most.
Thank you, Chelsea. Enjoy the rest of the day. And a couple of data out from the UK this morning. The inflation number, which rose by 0.6%, and new figures from the Office for National Statistics showing that the average price in the capital hit £514,000 in November 2020. However, the reflation trade is one of the key drivers of the market right now, as investors bet that stimulus packages and a post-lockdown boom will drive prices higher. Let's get more insight from Juliana. Good afternoon, Juliana. Well, latest figures show that inflation across the UK rose in December. Several economies are predicting that inflation will keep rising as the UK economy reopens later this year, following December's increase. What are you hearing?
Well, UK inflation, as you said, doubled in December, rising to 0.6% from 0.3% in November. Still really historically low. Bank of England have got a benchmark of 2%. But considering we are in and out of lockdowns, this is pretty good. I think what economists are hoping is that if the vaccine rollout, which is going pretty well, Britain is one of the world leaders in inoculating its citizens. Almost 4 million people have received the jab thus far. So if this continues, and if we can get out of some of these restrictions, then hopefully by the second half of the year we could be at that Bank of England benchmark. But however, there are some concerns. I think now all eyes are on next week's unemployment figure. The last we had was a reading of about 4.9%, but the Bank of England Governor Andrew Bailey was speaking last week. He thinks it's about 6%. If that rises, then of course consumer confidence falls, because people aren't going to be working. If you're not working, you're not going to be spending. And then that rise that we saw in December could be wiped out.
So how are the markets reacting to these numbers this intraday?
Well, it's less domestic, more internationally focused, of course, because it's Inauguration Day. It's a historic day. And I think given the numbers you read out at the top of the programme and what's happening in Europe and in London, I think, the markets are pretty much waiting impatiently for 46 POTUS to be sworn in, which is taking place about 4 p.m. London time. All eyes are on Capitol Hill at the moment. So at intraday, the all share is up 0.46%. The FTSE 100 is up by 0.32%. And the FTSE 250 up by a whopping 1.08%, so triple-digit gains there. British pound still trading high against the dollar by 0.39%, up against the euro by 0.44%, and up against the Japanese yen by 0.29%. I will very briefly mention, Chimaze, that we do have the UK Africa Investment Conference taking place today. Nigeria have a very big showing. This time last year, President Muhammadu Buhari did fly into London. Of course, that couldn't take place today, but billions of pounds have been pledging. It's a huge deal. The next session is taking place in a couple of minutes, which I will be joining. Yes, and of course, Britain still re-emphasising that they want to be the investment choice for Africa and Nigeria as they are living through this post-Brexit period.
Yeah, I guess we'll keep tracking that investment conference there going on there. But then update us on Burberry's reporting today.
Yeah, well, Burberry, the classic British designer brand, they've given their 12 weeks to December the 27th update. Not great, I'm afraid. They've shown that their sales are down 40% in Europe, even though people may realise that they had Marcus Rashford, the football star turned celebrity turned, if you follow social media, people want him to be the next Prime Minister of Britain because he's really flied the flag for children who are from less privileged backgrounds. But, his campaign was pretty successful because he got a lot of young people interested in the brand. But unfortunately, it's not been great, as we've seen for retail. I think for Burberry, 15% of their stores have closed. A lot of people that fly into the UK like buying Burberry because it is such a monumental British brand, but people haven't been flying. However, in Asia, sales are still good. I think for the 12 weeks to that time, so the last quarter of the year, I believe their sales are up 27%. Online, they're doing well. Globally, up 50%. In Asia, more than 100%. But, they're bucking the trend that a lot of retailers are going through at the moment.
Okay, Juliana, just keep an eye on that Africa Investment Conference, and hopefully we'll talk about that tomorrow.
Thank you.
And stocks in major Asia Pacific markets were mostly higher today, with Hong Kong listed shares of Chinese tech Alibaba surging following the reappearance of founder Jack Ma. Shares of Alibaba listed in the city surged 8.85% in afternoon trade after Jack Ma appeared in a video posted on Chinese social media addressing rural teachers as part of one of his charity foundation's initiatives. Hong Kong's benchmark Hang Seng Index advanced around 0.9%. Mainland Chinese stocks closed higher, with the Shenzhen Component gaining 1.46%, while the Shanghai Composite advancing 0.47%. Elsewhere, South Korea's Kospi finished its trading day 0.71% higher, while the stocks in Japan lagged on the day. The Nikkei 225 declined 0.38%, while the Topix Index shed 0.34%. Shares in Australia edged higher, with the S&P ASX 200 up 0.41%. And U.S. stock futures held steady in early morning trade as investors awaited for President-elect Joe Biden's inauguration. Futures on the Dow Jones Industrial Average were just 20 points higher, while S&P 500 futures and Nasdaq 100 futures traded in mildly positive territory. Netflix soared more than 12% in extended trading after the company reported strong subscriber growth and said it's considering share buybacks. And investors will also be on the lookout for any further information about Biden's $1.9 trillion COVID-19 relief plan unveiled last week. And on the oil market, well, the Secretary General of the Organization of Petroleum Exporting Countries, Mohammed Bakindo, says OPEC will continue to strengthen its relationship with the U.S. energy industry under Joe Biden's new administration. This comes despite the Democratic leader's stated commitment to fight climate change and focus on renewable energy. Mr. Bakindo congratulated Biden for his upcoming inauguration during a virtual panel hosted by the Atlantic Council Global Energy Forum. OPEC leaders were known to have at times communicated with outgoing President Donald Trump, who was particularly vocal and active about the oil markets and what he believed oil-producing countries should do to alter crude prices. In the meantime, oil prices climbed with U.S. stock markets earlier today ahead of Joe Biden's inauguration as U.S. President on optimism that more government stimulus will eventually lift global economic growth. Brent futures for March delivery rose 2.1% to settle at $55.90 per barrel, while U.S. West Texas Intermediate crude settled 1.18% higher at $52.98. And gold prices rose in early trade today as expectations for a massive U.S. stimulus to help the world's largest economy recover from the coronavirus jolt bolstered bullion's appeal as an inflation hedge and pressured the dollar. Spot gold gained 0.5% to $1,848 per ounce, while U.S. gold futures added 0.4% to $1,847. Among other precious metals, silver climbed 0.9% to $25.42 an ounce. Platinum rose 1.2% to $1,096, while palladium gained 0.4% to 2,361 pounds. And as Ugandan President Yoweri Museveni gets re-elected, what impact will that have on the economy? That's our focus next. And Ugandan President Yoweri Museveni has won a sixth term in office, fighting off a challenge by former singer Bobi Wine. Ugandans went to the polls on January the 14th to elect a new president and other political leaders amid tight restrictions on preventing the spread of COVID-19 pandemic. Throughout the campaign period that started in November last year, key players in the economy expressed fears about the post-election environment. Well, Matt Kenniger, Associate Practice Lead at Frontier View, joins us now. Thank you, Matt. Always a pleasure to have you. Good afternoon.
Hi, good afternoon. Thank you for having me on the program today.
So what will President Museveni's re-election mean for government policy in Uganda?
So I would begin by saying Mr. Museveni's re-election is not really a huge surprise. I think it was quite broadly expected. But in terms of what it means for policy continuity, broadly, we expect to see pro-business policies continue going forwards. We don't expect to see a major or a significant shift in policy over the next year or so, or during Mr. Museveni's next term. Quite broadly, Uganda is viewed quite favorably by allies in Europe and North America, so there's probably very little pressure on Museveni's government to change direction in terms of policy. But related to this, there's unlikely to be an opening up of political space for the foreseeable future in Uganda. So for the foreseeable future, really, policy will stay as it is in our view.
And following the weak performance in 2020 caused by the COVID-19 pandemic, what is the economic outlook for Uganda this year?
Yeah, so certainly growth has weakened in 2020. The economy contracted by around about 6.5% in the second quarter of 2020, which was pretty significant. However, we do expect the economy to narrowly avoid recession in 2020, which is quite good by global standards, really. And fundamentally, the economy is in a very positive position to perform well in 2021. We are expecting growth of around about 4 or 5% of GDP in 2021, really driven by strong domestic consumption and, to a limited extent, a recovery in exports. In 2021, we also expect inflation to remain quite low and the currency to be stable as well.
So what should companies be anticipating in 2021 in terms of risks and opportunities?
As I mentioned, the fundamental or the economic outlook is fundamentally quite positive. So it does offer opportunities for companies, both global, both multinationals and domestic companies. Selling to consumers is probably going to be a really bright spot in the economy. So consumer spending is likely to accelerate in 2021. Manufacturing is also expected to perform well. And the government's finances are in quite a strong position. So selling to government is also going to offer opportunities. But in terms of risks, so the government is pushing ahead with a localization agenda. There's likely to be an increase in import duties, taxes and incentives for local production, which does offer an opportunity for local manufacturers, but presents a risk for companies importing products. And there's also a risk of a tightening of lockdown restrictions. Across Africa, we're seeing an increase in coronavirus cases. If there is a significant tightening in Uganda, obviously, this would present a risk to the economy, especially services sectors. But broadly, I would say the opportunities outweigh the risks for the private sector in 2021 in Uganda.
Well, Matt, we appreciate your time always. Enjoy the rest of the day.
Thank you.
And the European Union has provided a total of 7.6 million euros in funding to help the United Nations World Food Programme address the growing food needs in Mozambique, driven by climate change, insecurity, displacement, and the socio-economic impact of the COVID-19 pandemic. According to the EU Humanitarian Aid Technical Assistant in Mozambique, despite challenging and unprecedented developments over the last few months, the EU's partnership with WFP has ensured uninterrupted assistance to many vulnerable families in Mozambique, especially to the increased number of persons displaced in Cabo Delgado. The funding from the EU allows WFP to develop life-changing innovations for longer-term climate resilience of communities in drought-prone districts of Gaza and Tete. The African Development Bank has approved an emergency aid of $686,000 to Madagascar to cope with the combined effects of the drought and the COVID-19 pandemic in far south of the island. This aid will be used for food assistance, vital for the most vulnerable groups, and support for the prevention of acute malnutrition. The food assistance targets 72,222 beneficiaries, with each beneficiary will receive a ration for 15 days for 3 months. The objective is to reduce acute food insecurity in the communities of intervention and to reduce the malnutrition which strikes the vulnerable layers of the Malagasy population. And South Africa's Monetary Policy Committee will meet for the first time in 2021 on Thursday, that's tomorrow. And economists are anticipating the central bank to keep rates at a record low. Reserve Bank Governor Letseja Kanyago is due to make the repo rate announcement, of which the MPC has indicated that monetary policy is already stimulatory and reiterated that growth and employment can only be lifted by significant structural reforms. Makwe Maselina, the chief economist at Makwe Fund Managers, says it's likely that the repo rate might remain unchanged.
You know, given what happened last time, that they left interest rates unchanged, though the decision was a split one. So we think they will continue to leave interest rates where they are. But yes, definitely we wish that the guys could at least give us a 0.25% cut. But chances of us getting that are kind of slim. And the reason we're wishing for that, so far central banks, our central bank, just like other central banks around the world, they're the ones who've been acting much quicker compared to policymakers when it comes to stimulus. And we've seen all that happening since 2007, that they're very quick to come with monetary stimulus as compared to fiscal stimulus. Hence, every time people have these high expectations when it comes to central banks, but we are mindful that you don't just need one set of policies. You need both monetary and fiscal policies to be implemented. Maybe government has to be more creative, maybe give some tax breaks as much as they don't have money to those sectors which are highly affected, and also maybe looking at getting the likes of municipalities that, guys, when it comes to the rates and taxes for those companies.
And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.